The crypto market is taking a dump to start the week. We're going to be discussing all the earnings we're going to see in the coming days, as well as the latest economic data and much more today on Money Never Sleeps. Welcome back, everybody. Hope you had a good weekend. Before we get going, do us a favor, hit that like button. If you haven't yet, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research before making any sort of buys or sells. Remember, this is the year of do less, in our opinion. So, not trying to get too crazy here. Kev, we got a big week coming up. We have tech earnings. We have GDP data. We have inflation data. We have housing data. We have job data. So much data. Just data coming out of our ears. How are you feeling about the markets this week? We're also seeing a pullback with Bitcoin below 40K for the first time in, I believe, 7 weeks. So that is crypto is taking a little bit of a hit here. There's a lot to go over. How are you feeling? And then where do you want to get started?
Yeah, it's a really interesting point in the market. I think a lot of people, I think we said it on Friday that usually people buy the most at the top. And you're seeing a lot of people capitulate and buy in because some of these assets are just absolutely skyrocketing. I mean, NVIDIA today hitting $600 a share. Meta shooting up all the way, I think, to like 386 or something like that. But at the same time, there are some laggards in there. So it's really interesting to see how sentiment is out there. But we do know that a majority of the S&P and the NASDAQ are heavily weighted by some of the top companies that are performing extremely well here as well. So seeing Apple up, seeing NVIDIA up, even Tesla for the most part, even though it's been having a pretty bad start to the year, it still has a huge amount of weight relative to what everything else has been doing over the past year. It makes sense why a lot of these indexes haven't pulled back while some of these individual stocks have absolutely pulled back. So that's the thing that it's kind of hard right now because the big picture is the indexes, but once the things that are keeping the indexes start to fall a little bit, then I think people will start getting a better picture of what actually the market looks like. But it's very biased right now, just looking at the indexes and thinking that this is the entire market when it's really weighted. But the thing I really wanted to talk about today is crypto and Bitcoin and the S&P and all that correlation when it comes to the halving, because I think a lot of people will think that the halving is somewhat of a ritual where it's just cyclical, happens the same time, same way every time it happens. We get these massive pumps into it pre-halving years. We also see that there is a pretty good correction that we tend to get in the pre-halving year as well. So I want to pull that up and we're going to look at the screen. But before we get into it, I also have this on the screen too. Once again, all the times that TradFi has entered the crypto market with all these products, we can see that they tend to put in a top. Well, look at that. The spot Bitcoin ETF, it looks like it's putting in a top right there. If we don't get above 45 to 46,000, there's a good chance that the top for Bitcoin has already been put in. Just to say that out loud, I think right here, it's my conviction bet. I think that there's a good chance that this is going to be weighted down significantly. But pulling this up, we can see that these orange lines, these are the halving years, right?
You're on the same side as Jim Cramer then. That's a bold place to be, Kevin.
That's why I said if we don't get above 45 to 46K, if we were trading at 45 to 46K and we get rejected, obviously there is a good chance that Jim Cramer is right in this situation. The other thing is, though, I will say this because we did go a little bit deeper than I anticipated. And again, the reason I do say this is because if I look at this on the weekly, we're coming down out of the weekly from the overbought territory. I think there is a situation where I pulled this 5 waves up. If we end up putting in a structure like this where it goes a little bit deeper and our wave 1 goes all the way down to that $34,000 level, then we get a little bit of a bounce and rejected for the levels that we're currently sitting at right now. It's a good chance that wave 3 is going to be extremely massive, and this is just our final 5-wave move to the downside to the bottom of the entire market, I think, for crypto. That being said, we take a look at the short term for the time being, and we look at what's happened in the halving years, and we can see that obviously, I got to zoom in for this one because this one's a long time ago, but there was a pretty good drop here from, $788 all the way down to $481 there back in July of 2016. Pull that up. That's roughly 38%. So you can say that's 40%, right? It's a 40% drop in the market right around the time of the halving. Sometimes it comes before the halving. Sometimes it comes like right after. I mean, this one here, this is May 20th. I think that this one's a bit of a, a bit different considering that we had COVID. So it's down a lot more than people would anticipate. It's down 72%. But I think that the reason because COVID crash, everyone got scared. But still, that 38 to 40% drop is within that crash there right before the halving. So that's something to keep in mind when we look at that as well. Now, here we are, and obviously there's one in 2012. I don't have the data for that right now, but here we are, April 2024. I think it's Monday the 22nd or the 23rd or something like that is when the halving is due. We are expecting, let's say 38%, right? Let's say no crisis, 38% is where we're heading. Well, from the top here, 38%, 40%, that puts us right around, I think, right there around 29,000, which also would have been right around the same time that we started pumping from Tether in October. So we've talked about that before. That's something that we can kind of anticipate as we get closer to this date, April. So now the question is, does it happen before then or after? Well, let's take a look at something that people used to say all the time, that Bitcoin is correlated with the S&P. Well, it kind of is, right? We can see that there's these massive drops right around here at the same time as the halving. We haven't gotten one yet, but we anticipate that there is going to be a pretty good drop or a move to the downside when the halving does come, possibly, right? That's going to be something that we're going to keep an eye on. I think that there isn't a scenario where Bitcoin drops or even bottoms in the market without the S&P following in some degree. So everyone that's saying that, this is a bull market and, the Bitcoin halving, it's the same every time, nothing's going to change. Well, then we have to account for this, pretty good sizable drop that's coming in the market. Do I think that it's going to stop at 40%? No, you guys know how bearish I am at this point, but I do think that there's a good chance that if this does come down, this could be getting close to the top of the market, very similar to how this was the top of the market, right? I think that things like this do come out at the wrong time. You never see an ETF or any of these products come out during a bear market. I mean, look at the futures came out literally at the top of the market in December of 2017. Coinbase came out in April of 21 before we had a massive correction. The futures ETF came out in November 21. And here we are in January 24, the spot ETF comes out. So these things don't happen close to the bottom. They always happen close to the top. I think that we are anticipating this 38 to 40% move for Bitcoin to the downside around that 29,000, 30,000 level. That would be my base case for what happens here moving forward. The thing is, though, will TradFi follow with it instantly, or will be a little bit of a delay? I'm not sure, but that's something we have to keep an eye on, right? The S&P and Bitcoin, for the most part, if we look at the historical charts, are correlated. And, right now, everyone's getting into this mania top of buying everything. And like I said beforehand, a lot of the weight in these indexes are coming from these tech stocks. So any of those report bad earnings in the next 3 weeks, there's a good chance that we could start to see some of that pullback in the S&P and probably Bitcoin going a little bit lower. So I'm really interested to see how Bitcoin's going, because I think they're leading the charge on what the market is going to do, but I think it's all within the same C wave pattern that is going to lead us to the final wave of this bear market and hopefully just end this shit so we could have another 15 years of just up only. But I just don't think that we're quite there yet.
Yeah, the markets are starting to potentially price in that we're not going to be getting cuts as soon, right? Like that's been the 6 rate cuts have been, what is keeping people bullish. I think, the market's starting to sober up a little bit from their mania. If we look at the week ahead, like I said at the top, ton of data coming out. Thursday, we get Q4 GDP, that first number expected to come in around 2% compared to Q3, which was almost 5%. We're going to get jobless claims. We're going to get retail inventories. And then on Friday, should be a pretty big one also. We'll get personal income, personal spending, and PCE. So finding out what inflation is looking like with that gauge of it right there. From a earnings standpoint, now we're starting to get into, the big boys with earnings. We have Tesla this week. Later today, we'll see United. We had the Spirit earnings last week and how they got sold off, or the Spirit sell off last week. How are other airlines doing? We'll get, I think Visa, MasterCard, LVMH, like a lot of readings around consumers also. Hey, look at that nifty little calendar you pull up right there. But we're going to see a lot around the health of the consumer and what they're spending their money on and how that is going to impact things throughout all of 2024. So really big data here. And, you want to talk about the vibes for a second and how good the vibes are, Kevin?
I don't know how good the vibes are, Jay. That's your department, brother. That's all you. You
That's not
love the
my
vibe section.
department.
Vibe
That's
section.
my. This, oh God, I'm just like blast me off into the sun if I have to keep hearing about this stuff. Like, oh. Anyway, let's not dwell on that for
Yeah.
too much. We got earnings coming
Yeah.
up. We'll see Tesla on Wednesday. That is the, I think, most highly anticipated one. But of the other earnings, which are you most interested in?
Just looking at this right here, Johnson and Johnson, I think is going to be really important. I know that they were mulling over potential another bankruptcy, and that was a few months ago. So we'll see how the earnings have maybe changed their outlook. I don't necessarily think anything's changed too much in that department, but it's going to be really interesting to see a lot of these tech companies. I mean, Texas Instruments quietly is going to be interesting because they also produce a lot of chips and stuff like that for semiconductors for missiles and weapons and stuff like that, which they're not just calculators, guys, which is just something to keep an eye on. Netflix is going to be interesting too, because I think Netflix is extremely overvalued here. Again, they have to continue to see growth in order for them to justify their outlook. I don't know what their outlook's going to look like. Netflix continues to raise their prices and their packages to the point where now you have ads on Netflix that are going to be coming soon. So I think it's going to be really interesting to see if that shakes the consumer. But if it's not as good as it was in the previous quarter, then there's a good chance that we can see that pull down. But Netflix is just because it's like $500 almost a share. But Tesla is going to be really important. I think that could get us down to that 194, and maybe we get a bounce from there. But I think the airlines and then the credit cards are going to be really interesting too. We know that the credit card debt's a huge problem. We know that the airlines have been going through a wild period of time here, right? Maybe they did well on holiday travel, but maybe their outlook doesn't look as great. Maybe some of the issues in the Red Sea, some of the oil issues might be causing a problem. I think the problem comes more from demand rather than what's going on over there. But I think it's going to really impact. So credit cards, airlines, and then some of those tech companies are going to be really important to watch. I think the banks are not going to move at all until we start seeing, some of the March numbers come through, right? Maybe Q1 of this year, when we get those earnings later on, maybe April, that's when we start to see some of the pain with some of the banks.
Yeah. The Alaska Airlines one, after the whole, door being ripped off thing, is going to be fascinating how those earnings pan out.
It's a Jeep.
Okay. All right. That's enough of that. So we talked through what we're looking for earnings, economic data. I know you want to get in. You want to go back to China. I know that you are, that is, you might as well just move over there at this point, man. Like we'll figure out a time for the show when it works over there. You can just be boots on the ground in China, reporting on all the economic news. That'd be pretty fascinating.
I couldn't tell you. I don't know. I don't know. I don't know if Asia would be my thing, but I like watching Asia and seeing how the markets do. I think that it's probably the leader right now in the global market, and people just aren't paying attention to it. But let's just start with the monthly on the Hang Seng, right? The monthly on the Hang Seng, we are below the historical trend line. We are down 12.24% to start the month. It's only been 22 days in January. We've had a bunch of holidays. We've had weekends. So when we look at this, it's been significant amount of price action for how little we've actually had in terms of days traded. So that's really interesting to me. But if we look at this on the daily, yesterday, I talked about on the show last week, I said that Mondays tend to be when they sell off a little bit more, and they sold off a whole ton last night. They bought back right at the bottom. I think that's dubiously, I think that someone probably wanted to keep this market up a little bit higher. So they definitely did a bit of bidding. But at one point, it was down, I think, 512 points, 515 points. Came up and closed around 347 down, but still it's 2.27%. It's below the historical trend line of support. I mean, we haven't seen these levels since 1997, and we're getting pretty close to the 2022 levels where, it's 14. What is the low right here? 14,597. I mean, we're currently sitting at 14,961. So roughly, 450, 500 points away from getting to that point. And if that's the case, are people going to continue trying to, catch the knife by the dip on these Asian indexes? I think a lot of people are getting burned trying to buy and catch this down here. Now, I have a very cynical view of this because I think that the problems in China are going to soon be the problems of the rest of the world. And that just comes to dollar and collateral shortage to the point where we're going to have to sell off assets in order to meet and pay some off a lot of those debts. But I think there's a good chance that we still have a good move to the downside for the Hang Seng, roughly around 28%. That could be double bottoming us to, let's see, I have to go back pretty significantly, I think, for this one. I mean, that brings us to 2008, right? It's been down only for a long period of time. 2008, yeah, great year of wine too. That was a terrible joke. But yeah, this is pretty much their crisis. We're not acknowledging it. I think a lot of money is flowing out of Asia and it's going into other parts of the global economy. Maybe it's going into Japan. I mean, we can pull up the Nikkei right now. It was up, I think, 583 points last night. I mean, there's no difference in what's going on in the Chinese markets as opposed to what's going on in the Japanese markets. The Nikkei is just absolutely going for all-time highs. I think that we're just seeing, a flat corrective pattern that's spanning not decades. Yeah, decades, I guess. Started in 1990 all the way down to 2008. Here we are in 2024. I mean, we're only about 6% away from the all-time highs. We've been moving up in like 500-point days for the past, start the year. I mean, it's just green missiles straight up. Tons of gaps below that. I think there's a good chance. I mean, everything is lining up that we're going to see another lost decade for Japan. I mean, it's very possible we could see something drop significantly like this. I'm not saying that it always has to happen that way, but the circumstances and the situation for Japan are so similar to the 1990s bubble, where everything was extremely overvalued. They were mulling over whether the fact they wanted to do rate hikes. They ended up doing rate hikes, and that absolutely sent the market just in a downward spiral. We know they love their negative rates in Japan, but right now, we see that their inflation has been a very big problem for them. It looks like it's coming down. Their wages are going up, but at the same time, so is the prices of goods over there. So it's a really weird spot right now for Japan, and them holding so much U.S. debt along with China, who obviously is holding a ton of U.S. debt. And they met with the United States last week. I'm sure that the Treasury bill issue and U.S. debt has been a huge topic for them. I think there's a good chance that we could see this one go to all-time highs, maybe go a little bit higher or double, just get a double top here. And then in the months to come, we're just going straight down. It just seems that Asia right now is in a different place than the United States. Japan is the exception, I think, just also because of how much influence that the U.S. has on Japan too. But let's look at this right here. This is the SSE, which is the Shanghai Composite Index. Again, a triangle pattern. Should be trading within it. It had make or break. It either went up or went down, and we're currently trading on the monthly below this. It tells me we're probably going to come down significantly. If I'm just looking at the 2008 lows, as right here, sitting somewhere around 1685, that is still roughly 40% drop from where we currently are. And we talked about this, I think, 2 months ago or so. Korea with their short sell ban. Well, let me just zoom in on this a little bit here, because we are seeing, and I guess you can see it on the monthly, but we're seeing a bearish engulfing candle on the monthly after they had that little rally from, you can't do any short selling. It came around November, I think, early November, November 8th. So you rallied up. Now we're halfway past it, right where we rallied from. The question is, does it keep going down, or are we going to keep rallying up? I think we're going to start seeing this go down further. If we look at this on the monthly, okay, I just had it. We had 5 waves moving up to that point. I think it's a very good possibility that this 100% is just an ABC, and we're going to keep pushing down. I think Asia is definitely seeing problems that the rest of the world is not seeing. I mean, we're all seeing it, but we're just not seeing it in our indexes or in our markets. All that money's flowing into, whether it's the European markets, it's flowing into the United States markets. Maybe that's why some of these bubbles are continuing to go, because there's just so much cash that is flowing into us. U.S. ETFs. Can't think of any other countries that, pretty much the U.S. is going to be the last resort, like we always anticipate, right? They are the last ones to see anything, but when the U.S. goes, everything else pretty much is in shambles at that point. So the Asian markets are very, very scattered right now, more so to the downside rather to the upside. I think a lot of people are trying to catch those knives. I think the Nikkei is going to follow suit fairly soon, but we just have to wait and see what happens. There's no reason why. There is a couple of reasons why. Just looking at this right here, the dollar is extremely strong here, and that's because the Nikkei keeps going up in price, which means that their yen is being devalued. China's pretty much at the same spots as they've been for the past, 10 years when we look at the markets, but they also have, I think, billions of dollars more in terms of cash that is within their system. So it tells you that all those injections of liquidity that they're pumping into the markets aren't doing anything to save their situation. There's a problem there, guys. That's just inflation. That's problematic for dollar shortages, because now we know that the thing that pays off debt, the US dollar, is now being devalued by the yuan and all these other currencies. I mean, the dollar is devaluing those. So it's a really sticky situation, and we're not worried about it because we're just looking at all these tech stock prices going straight up here. So something that the news isn't going to tell you, but something you should be watching like vigilantly as possible, is the Asian markets.
All right, so we're up to date on the Asian markets. Let's talk crypto for a little bit. We've seen this big pullback. Bitcoin's fighting to stay above 40 right now. ETH is down in the low 2300s. Solana taking a big drop down to the mid 80s, around 85 at the moment. What do you think has been leading to this pullback? We've seen Grayscale moving money around. We've seen stuff with FTX. Like, what in your opinion is causing all this, and where does the bleeding stop?
That's where the bleeding stops can be many places, but we'll just take this big picture. So I think what's going on right here is obviously Grayscale has a ton of Bitcoin that they're just absolutely offloading, right? I think this is part of the reason they also wanted to convert their trust to a spot ETF trust. So now that we know that Grayscale is the one who just doesn't care, they're not even hiding the fact that they're sending it to Coinbase, to these exchanges to offload. We're starting to see, the news that FTX is, I think, liquidators accounted for 1/3 of whatever Grayscale had recently sold. So we know that a lot of those people in those exchanges that were hurt from FTX definitely wanted this price to go up to where it was. They wanted to get out ahead. Kind of something that we have been talking about for months, especially in October, when we were saying that why is the price shooting up like this? Well, we know a lot of people were burned by what happened with FTX. A lot of people are going to be burned by what happens with Binance, right? CZ's hearing is next month. There's a lot of things that are just lining up to the point where it's like they want to get things done before any of that information comes out. But I think, if anything, the exchanges got the trade wrong back in 2020, 2021. They got hurt by FTX, and now they just needed this market to go up here. And now that they're here and they can get out and hopefully make their creditors whole, that's what they're doing. Now, the question of where we end up is going to be really interesting, because the thing is, the institutions are selling Bitcoin right now, but people still believe that there's going to be a bull run, that Bitcoin is going to take off, right? Because the ETFs are live. We're in a bull market. The S&P, the NASDAQ, the Dow Jones, everything is going straight up. NVDA is going straight up. And it's creating this terrible situation where nobody wants to sell. And that is the worst thing in the world. And you're seeing people telling you to buy at the top. And this is just big picture, everything that's going on in the market. People who are holding Bitcoin thinking that it's going to go up, that these ETFs are going to take off at some point, are probably going to start to get scared once these, let's look at Bitcoin and how much it's down since the ETF got approved. The ETF got approved. It rallied up to 49K. It wicked all the way down to right here at 39 something, 39.4, 39.5 or so. And then here we are currently trading about 17, almost 18% down since that move to the upside from the ETF approval, which is roughly the 11th to where we currently are. It's 11 days. 11 days, we're down 18% in the Bitcoin market, right? That's something that should be scaring a lot of people. However, I think a lot of people still have a lot of faith. They're like, oh, that's just crypto. But now that TradFi's in it, BlackRock said that they're going to, offload $4 billion into the market on the ETF. They don't have to do it right away. They said Q1, but it could be.
BlackRock has always done everything on the up and up. They've never done anything that isn't above board. So we have to trust them, right?
It's the only thing we could do, right? This is what I think. There's a video earlier today by Heresy Financial. It does a great job of explaining why people buy the top of the markets, why things happen, why things come out when max euphoria sets in, why people FOMO in. He had the best advice I think I've heard out of anyone. Don't be a sucker. It's just the best advice, because you know how overvalued everything is here, right? We know that the tech stocks keep ripping up, and you're just FOMOing into a lot of this stuff. And I think a lot of people are holding on. They're just not selling assets because they think it can go up forever. The bad thing is, when it comes to people in the market, and not just the market, but the global economies, a lot of the times when people sell, it's because they're forced to sell. Otherwise, they wouldn't necessarily sell, because they think, oh, it's going to keep going up forever, right? But if something happens that absolutely takes the market a little bit past your threshold, now you don't have a job, now you have bills that you need to pay, and you need to get out, and you need to have that cash, you need that liquidity. well, then you're forced to sell, and then everyone else is forced to sell because, hey, I'm in the same situation. Guess what? I need to, I got to pay these bills. I got to put my kids through school, stuff like that. But when the interesting thing right here is that no one's selling just yet. And I think that's why we're seeing, Grayscale and any of these other people that needed to offload a lot of their Bitcoin, a lot of their other alts, anything that they wanted to get rid of because they probably anticipate something bad's going to happen. Well, this is probably their best opportunity because no one's willing to sell. No one was buying Bitcoin back at 20,000, 25,000, right? Everyone was buying Bitcoin at 34, 35,000. Everyone was buying Bitcoin at 40,000. Everyone was buying Bitcoin at 45,000.
I was buying it. I bought it 20. I bought the low 20. Sorry, my bad.
Yeah, that's because you're a genius, though. You're not a sucker. But again,
let's not go that far. Let's not. Let's not go that far. Is all I'm going to say.
No, I'm not putting anyone down, but it's just I don't want people to fall for these traps that continue to happen in the markets. I mean, I showed you that chart of how TradFi enters the market, the crypto market. And every time they do, it marks a top in the market. I mean, then you have a massive correction that follows after. So I think that that's where we are with the crypto right now. People aren't selling. The institutions are. Once there's a dip and people are still trying to buy the dip, I think goes up a little bit, they're just going to keep selling on them because once you buy, say, I don't know, you buy a shit ton of Bitcoin in this range and it goes down a little bit. Oh, it makes sense to DCA, right? And then it comes down a little bit more. Oh, it makes sense to DCA, right? And then it gets to a point where it's just like, I got to turn off recurring buys at this point. I'm bleeding out cash. I think that's going to be where it takes us. And, say for this, I showed you the 5 waves that I anticipate. Something like this. I think that if this does go deeper than we anticipate, we go to 34,000 for wave 1, we get a bounce to maybe 40,000. Then we probably have a massive move down to maybe sub 20,000 for wave 3, maybe a bit of a bounce here. I don't even think, I might even put this a little bit lower. I might say wave 3 could go even close to like the FTX lows. Then we get a bounce to maybe 20,000. And then wave 5 could be a bit extended, and that could bring us down to 11,000, maybe a wick down to that 975 level like I've been talking about. But that would pretty much mark our 5 waves down, 3 waves up, 5 waves down, ABC corrective pattern on the macro for Bitcoin. So right now, the key levels to watch, if we get a bounce here, 45 to 46, that's above that, then it's probably going to go up a little bit higher. If we don't get that, then we're probably going to see 34,000. If 34,000 doesn't hold, then this situation where this blue line, this 5-way move that I'm talking about, there's a good chance that could even be in play where we go down to 30,000, we bounce to maybe 39 to 40, 34,000, and then we have this massive wave 3 and maybe even an extension in wave 5. And that pretty much marks the bottom. Now the question is time-wise, could we bottom down? I think probably, this is the daily. I would like to look at this on like the weekly. Yeah, see, this is too sharp of a pattern. So I would think somewhere around maybe like September to maybe February of next year, we could see the bottom for Bitcoin. So it could take time, obviously, as structures play out. But I do think that within the time frame of now till February of next year, there's a good chance that we could see that Bitcoin bottom. If everything lines up, there's a dollar shortage, there's a collateral shortage, people start selling off, institutions start selling off, we start seeing the indexes pull back, we could be, another year away from buying Bitcoin at historical lows. I just don't think it's here right now. Obviously, with the amount of supply that these people have, I would not be trying to bid against them here. Eventually, there's going to be a bounce. I just don't know when it's going to be and when they want to let it be. So that's going to be an interesting thing to see for Bitcoin on that front. For alts, I honestly expected a rally. I'm not seeing it right now. If anything, I'm just seeing these fuckers sell this shit off. Like AVAX, I honestly believed that we were going to see, another wave 5 pump. Is it still possible? Yes, it is. But you would need a ton of tether to just FOMO, just pump this into the market and hope that retail buys into it. Otherwise, that's just going to be a wick straight up. It could be nasty. But I mean, look at XRP. XRP is at 53 cents, roughly 60 something cents a few weeks back. ADA is under 50 cents again. Link is at $15. It's just trading sideways here. Seems like it's trading sideways forever. Matic, this shit coin. I'm just kidding. I still hate Matic for after losing that bet, but Matic is down at 75 cents. I mean, if it starts closing below this orange line here on 74 cents, then we're probably going to be coming down a little bit lower, guys. But it's going to be a matter of time to see how this plays out. I think there are bigger things than technicals at play, but at the same time, if we look at this on the macro, I mean, if I just pull this on the monthly for Matic, and we take a look and see what's going on, this could easily be, A, B, C, and then this is just, you know, the 5 waves on the way down. But that's getting really nitpicky. Nothing too crazy outside of that. But I do want to wrap up with one last thing out of Asia, because I can't get enough of Asia at this point. And it's something that we need to keep an eye on because no one cares about it. This came out a month ago. Evergrande liquidation hearing pushed to January, focus on new debt revamp plan. Hong Kong, December 4th. Look at that date, December 4th. China Evergrande Group on Monday said it has been granted an adjournment of a court hearing into liquidation petition to January 29th. That is 7 days from today. The problem in China, if that continues to get worse, these assets continue to start dropping, then you think that they're going to keep restructuring debt in hopes that something changes. I think there's going to be a good chance that we could be seeing a fire sale fairly soon. So it's just something that we need to keep an eye on, because I think that the things in China are not great. And if they continue to accelerate and money leaves China and they just need to pay off debt and they're just printing tons of yuan and nothing's coming of it in the markets and it just keeps dropping, well, then those assets are just becoming worthless by the day. And it's got to stop at some point. Otherwise, they are in absolute ruins come whenever the entire market, the global market, does bottom out. So it's going to be interesting to see on that front. I got nothing else. I know I've been talking for a while, so I'll let you take it away from here.
We are going to wrap it up on that note. Appreciate everybody for joining us today. Randy, Mr. House, as always, good having you guys here with us. We'll be back throughout the week to talk about everything else happening in the markets, whether it's in the US, Asia, on the moon, the Antarctic, anywhere that there are markets, we're going to be talking about them. So have a great rest of your day, everybody. Stay safe out there, and we will see you next time.
Don't FOMO into the vibe expansion. Take care, everyone.